What if I told you that there is a way to save 1 to 3% in your mortgage rate for the first 1 to 3 years of your loan, saving you thousands of dollars for the early years of your loan, allowing you to get into home ownership right now while buyers have more power, and helping you to have a more manageable mortgage payment until mortgage rates drop and you have an opportunity to refinance into a lower long-term rate? The mortgage product I'm referring to is called a temporary buy down, and it's where the buyer negotiates with the seller to put a sum of money into an escrow account that will supplement the buyer's mortgage payment during the term of the buy down. I will break down the nitty gritty of a temporary buy down in just a moment, but first I wanted to explain why I love this product so much, especially in the interest rate environment where we are today. You've probably heard about a permanent buy down in the past where you pay an extra closing cost so that the interest rate is lower for the entire term of the loan. I'm not a big fan of those right now because there's a big likelihood that you'll refinance in the early years of your loan if you're purchasing right now. The reason that I say that is because once inflation gets under control, mortgage rates are projected to drop. If you refinance a loan on which you paid a permanent buy down before you broke even, then you overspent up front. But a temporary buy down is a choice where you can't lose. The reason that I say that is the funds that the seller puts into the escrow account for the temporary buy down, any balance that remains if you refinance during the temporary buy down term, that balance would be applied toward the principal on your new loan. So you can't lose the money. When mortgage rates do drop, buyers are going to come out in full force. There's a lot of home buyers taking the sideline right now, waiting for mortgage rates to drop, which is a mistake because once mortgage rates drop, there's going to be a lot more competition. So take advantage of this product because it will help you to get into the home now, avoid the competition, and have ideal terms on your financing. Let me break it down for you. I'm going to use an example of a purchase price at 700,000 with 20% down, but you don't have to have 20% down. You could even do a temporary buy down with as little as 3%. And the interest rate or the note rate that I'm going to base this example off of is 6.5%. The example above me is a 1-0 buy down. That means that you would pay an interest rate that is 1% lower for the first year of the loan. So if the note rate is 6.5% for the first year, you would pay 5.5%. That would save you almost $360 a month. And you would ask the seller for a little bit less than 4,320. That would go into an escrow account, and the lender would pull that difference from the escrow account each month as you make your payment. If you refinance during the buy down term, then any unused funds would be applied toward the principal of the new loan. Now, this example is a 1-1 buy down. A 1-1 buy down means that you pay an interest rate that is 1% lower for the first and second year of the loan. So, in the first year and second year, you save $360 a month, and the total cost of the buy down is $8,640. You would need to negotiate for the seller to pay that when you write your offer. This final example is a 2-1 buy down, which allows you to pay a rate that's 2% lower in year one, 1% lower in year two, and only in year 3 through 30 would your loan revert to the note rate if you still have the loan. In year one, you would save $702.14 per month. In year two, you would save a little bit less than $360 per month. The total savings in the first 2 years would equate to $12,745.20, and that is how much you would need to negotiate for the seller to put in a concession toward the escrow account. As you can see, the savings from a temporary buy down are significant. You can't lose the funds because you can refinance during the buy down term, and any unused funds during the buy down term would be applied toward the principal balance. So this is definitely a product worth considering to get into homeownership now. My name is Peyton Fullerton. I'm a mortgage broker in Denver, Colorado. I've been originating loans for 20 years, and I'd love to help finance your new home in Colorado. So please do reach out.